Making tax digital for income tax and self-assessment. It helps if you know a little bit about making tax digital for VAT, but if you don't, it's relatively straightforward anyway. Income tax is more complicated than VAT because the tax law is more complicated, and therefore you have to provide potentially more information to HMRC. So if you are self-employed, you need to provide information about the self-employment. If you rent out property, you need to provide information about the property you rent out. If you have foreign income, you need to provide that information. If you have dividends, you need to provide that information. But if you don't have a type of income, then obviously you don't have to provide it. Now, in the same way as there are lots of different forms to submit for different types of income, for making tax digital, ITSA, there are lots of different submissions. So if we look at the cash book and we look where it says VAT return at a list of the different types of submissions, there are quite a lot of them, but actually people as a rule will not have to submit that many. It's only when somebody has a lot of different pieces of income that they'll have to submit them. However, I intend to go through them all now to give some idea of what's involved. Now, what we have additionally is we have a system for finding out which submission you send in particular pieces of information in. So, for instance, if you are a seafarer, you find that the deductions submission is the one to use. And so if we go down and we look at deductions and we find out what's in the deductions submitted, we find out it's the customer reference, name of ship, and the from date and to date. But if you're not a seafarer and you don't go to sea on a ship and you want to claim that for the purposes of income tax, you don't have to fill in the return. So it's quite straightforward. Anyway, the first one we have is the long self-employment one, and that basically divides the income up into different types of income, and it divides the expenditure up into different types of expenditure in a very similar way to is done in Form SA 103F, full form. There is a short version which people can use if they don't have that much income under 85,000, but that divides it really into income and expenditure. And then if you've got furnished holiday lettings, then you have to provide information about the income you're getting and the expenditure associated. If you have UK property that's not furnished holiday lettings, again you have to provide various bits of income about that in a submission. Dividends, unsurprisingly, you have dividends that you need to submit. Those charitable gifts, if you're claiming back tax because you paid money to charity, that has a submission. If there are losses claimed or losses brought forward, there's a submission for that. If you're self-employed, there's an annual submission which has things like AIA in it and various other things. If you're a farmer, potentially a farming average adjustment. Similarly, for furnished holiday lettings, there's an annual return. For non-furnished holiday lettings, there's an annual return. Now, for CIS, there's a complication because HMRC know if you're paying CIS, who you've paid, and they may have different information stored to that which you have. So you only actually have to send a submission if the information differs. But if you do want to correct what information they have, then you have to actually provide the information as to where it varies. Which contractors you've paid or not paid. And the way our system works is it does an automatic reconciliation as long as you tell the system who you've paid what. And then we have individual disclosures, which is things, again, unusual things. We have pension charges, so what you might have got with pensions on lump sums and everything. Other expenses, as you can see there. Employment expenses where relevant, Employments, what income you've had from employments. Again, this is a reconciliation one, so if their information is correct and you accept it, then you don't need to put that in. Other employment issues, share options, that sort of thing. Foreign dividends. By the country. Foreign income. Insurance policy information. Pension income, not the state pension. Other expenses. Actually, we've got other income rather. Business receipts, that's for partners. Savings income, that's foreign savers. Investment reliefs, venture capital trusts and that sort of thing. Other reliefs. Foreign reliefs. Pensions reliefs. So if you paid out on a pension when you claim back. State benefits, again, this is one that's reconciled, so you compare the figures you have for state benefits to those with HMRC. We do an automatic reconciliation for that as well. Deductions, which we looked at earlier. And then there are the other ones right down the bottom, which are to do with the annual adjustments. And finally, UK savings income. This again, we're providing information by the details of the bank account. So what interest you received on each bank account. So that's a rough go through all the different submissions that can be done for making Tax Digital eat its up. And there are quite a few of them, but then that's not surprising if you have potentially quite a few different types of income. Obviously, if you only have a very straightforward setup, then an income from a limited number of sources, then you won't have to do one big submission with everything in it with mainly zeros, but you'll just do one smaller submission. The only quarterly submissions are the ones on property and self-employment, and those are the only submissions which at the moment require digital records, but we have built that into the system for the other ones as well. So there you go, that's a rough introduction into the different types of submissions that are available under MTD itself.